All right. What's up, traders? What is up, tycoons? Coming at you with a video on Exxon Mobil, ticker symbol XOM. This actually was a viewer request. I do these viewer requests every single week. So if you want to see your ticker in the next video, all you got to do is comment down below and I'll make a video on it as soon as I can. We're going to go over the bullish price targets to the upside, our bullish pattern we have forming right here, as well as some things to be aware of on the MACD and also the relative strength index. We'll also go over our major fib retracement levels, the 38.2, 50%, and 61.8. These are the three major and most important retracement levels that you need to be aware of. So make sure to smash the like button, subscribe to the channel. You'll learn a lot in this video. It's going to be pretty informative. Remember, none of this is financial advice. I'm going to go over some of the bullish and bearish price targets in different possible scenarios. Okay, so starting off, I want to highlight that we have an ascending wedge right here. Okay, if you take a look, we have this resistance level up here, not an ascending wedge, I'm sorry, an ascending triangle. Okay, this is actually a bullish chart pattern. It's a continuation pattern. If you take a look, all right, in the past, right, we possibly, if it's a continuation pattern, are going to continue this bullish momentum heading into this. Now, there's no guarantees, but if we do get a breakout above here, I've got some bullish price targets to the upside of 126.59 and also 133.17. Now, we're not going to hit these overnight. Keep in mind, we are on a daily chart, so it will take some time if we do get a bullish breakout to hit these price targets to the upside. So those are my bullish price targets. That's our bullish scenario right there. Now, you need to be mindful, okay, of the MACD. The reason being is we have a bearish divergence, okay? So if you take a look, clearly we're making equal highs at this level of resistance here, but our MACD has a high and a lower high. We're also seeing the same thing on the relative strength index, okay? If we actually zoom in on the relative strength index a little bit, we can see we've actually rejected this bearish divergence trend line multiple times, about 4 times, right? 1, 2, 3, and 4 touches. Now, the more times you test the trend line, the weaker it gets. So we do have the possibility of breaking through it, but we need to be mindful that it's a very strong trend line that we're rejecting and could continue to cause XOM to lose relative strength. Now, if this bearish divergence keeps playing out and we end up breaking this trend line here, we could end up getting an M pattern, right? There is a small gap down to fill right above 88 on XOM. Those daily gaps fill about 90% of the time. The big question is when they're going to fill, right? And so clearly, right now we're bullish. You could even say that this is a big bull flag right here. There's a lot of work to be done to fill the gap all the way down there. Now, these are the three major retracement levels right here. As you see, we've already bounced off of 102.96. That's our 38.2% retracement level. We've bounced off of it multiple times already, right? And it was a nice solid support level right in through here. The way you use these retracement levels is to spot trend continuation, right? Nothing moves in a straight line up or a straight line down. You get the move up, you get a healthy retracement and a continuation of the trend, or you move up and you break through the retracement levels, at which point you can spot a reversal when we could potentially come down to fill that gap down here. So, if we break through our major retracement levels, which are 102.96, 99.34, and 95.72, we could be getting an M pattern here to take us all the way back down. We already have a bearish divergence on the MACD and the relative strength index, okay? Earnings is going to be a big catalyst, okay? If you look at December, a lot of energy stocks fell a little bit. Crude oil fell sharply, actually, in December, and that could affect the outcome of earnings. Now, one thing you have to keep in mind is, yes, crude oil did drop in December, but China is now fully reopened. So will forward guidance for energy stocks be better than expected due to China reopening? And will this cause greater demand for energy or an anticipation of greater demand for energy? Remember, the stock market is forward looking. So if people think that energy prices are going to go up over the next 6 months due to China reopening, then the market's going to start pricing that in advance. So we do have some bullish, catalysts behind us. It just depends whether or not that demand actually follows through, right? A lot of people are kind of expecting that demand due to China, but it may not actually come through. All right, so that's what we need to look for on the relative strength index. Is you want to see us break out of here, okay? Preferably break out, retest this trend line as support, and head back up on the relative strength index. What you need to be aware of and cautious of is going to be the MACD sell signal, okay? A MACD sell signal is going to be when this blue line right here crosses below the orange line that happened right over here. And as you see, we got a sharp pullback, but we held our major retracement level here of 102.96. So even if this trend line does break, okay, we have all the way down to 95.72 to really hold support on. And that would still be a healthy move for a retracement to the upside, right? So we come up and let's say we get some type of a pullback. Let's say earnings is a disaster. We break down to the downside. We can still pull back to 95.72 and continue higher and eventually hit our bullish price targets, or earnings, because earnings is coming up very soon. Earnings season is among us. We could get the breakout to the upside, and that could be the catalyst that propels us up here towards our bullish price targets of 126.59 and 133.17. So hopefully you enjoyed this video. If you did, make sure to smash the like button and subscribe to the channel, and I'm out.